Welcome back, everyone. We're Simply Bitcoin. We break down the news from Twitter, the daily fail, meme review, software releases, hardware releases, and the websites by plebs. Joining us today, fellow Bitcoiner, the CPO of Luxor Tech Team and Hashrate Index. I'm talking about Guzman Pintos is joining us, but we are diving into the numbers first. Let's do it, Nico.
Number time! Number time is brought to you by Bitcoin 2022. It's going to be the largest Bitcoin conference ever. That's right, ever. That's how big it's going to be. It's going to be hosted in sunny Miami Beach, Florida, but be quick about it. Get your tickets now before the price goes up, but you can take advantage of the link down below in the link description for 10% off your tickets to Bitcoin 2022.
At the time of this recording, the block height is 718,194. The Bitcoin price, 42,695. Chain rewrite days, 749. Total public lightning capacity, 3,328.78. Moscow time, 23:42. And blocks to the halvening, 121,806. Nico, the numbers.
The numbers.
Look at that.
Hey, listen, at least it's not as depressing as yesterday. But in this time of consolidation and frozen in time that we've been stuck between 58K to 41K to 48K, we've had some awesome guests come on the show. So it presents an awesome opportunity to ask them, how do they feel? Guzman, how has your experience been? Were you expecting 100K Bitcoin in 2021?
Well, that's kind of like, to be honest, I don't know. I was definitely expecting $1 per terahash, like hash price. So more looking at what's like mining revenue. That's kind of my like holy grail. So yeah, I like holding Asics. But yeah, that didn't happen either. Let's see if it happens next year. So yeah, super bullish still on Bitcoin price.
Could you explain to everybody, because I know what that is, but most people that don't know, that don't mine, don't know what that is. Could you explain what that metric is? Why is it important, and who should be paying attention to it?
Yeah, sure. So hash price is kind of like miners revenue, and hash price is measured on a per terahash basis. A terahash is kind of the compute power in which you can measure the speed of different ASIC machines. An ASIC is a computer that is dedicated to mining Bitcoin, to securing the Bitcoin network that we all use. That's what essentially provides the security of Bitcoin, all of its robustness. So yeah, hash price is essentially that like dollar metric per terahash of compute power that you own when you have one of these ASICs. So if you have like 100 terahash ASIC and hash price right now is like 25 cents, that basically means that your machine is making 25 cents times 100 terahash, or $25 per day, give or take a few sats here and there. But yeah, that's kind of what the mining community follows, that like hash price metric. If that number goes up, miners make more revenue, more hash rate comes to the network, and Bitcoin is a more essentially secure network for all of us to transact on.
So we've been seeing a lot of news. We covered yesterday, right, that it was Marathon Mining. They just acquired 78,000 S19 XPs. Absolutely mind-blowing. $876 million. Now that we expect more hash rate coming onto the network, wouldn't you say that price per terahash is actually going to go down?
Yeah, sure. I mean, and right now we are seeing something that what we call like hash price super cycle. I mean, very similar. The hash price follows price quite a bit. But why we saw a super cycle in hash price is because a few months ago, we also had the China ban, where 50% of the Bitcoin network hash rate essentially was forced to turn off. So now all of the block reward was distributed among 50% of the miners. So essentially everyone's revenue kind of like doubled overnight. For all of us in North America miners, that was extremely profitable. So that combined with Bitcoin going to like 68K, that made like a hash price super cycle in which we saw like 45 cents per terahash, which is crazy. But yeah, long-term hash price will tend to almost towards zero, right? as long as there's a miner that is marginally able to produce revenue, there's an incentive to go and buy more machines, find power, plug them in, and secure the network and get paid for that work. If miners are profitable, there's going to be more incentive and more capital flowing to the industry to continue powering on machines.
Go ahead, Phil.
Oh no, I was just going to show it was a very interesting thing that happened today, okay, and it relates completely to mining, and I just wanted to show this, right? From Bitcoin Magazine, shout out to Darthcoin for letting us know. A solo Bitcoin miner with only 126 terahashes just won a block reward worth 6.25 BTC. So look at that, right?
Yeah, I saw that earlier today. That's wild. That's like one in a lifetime.
Yeah.
It's like probably harder than winning the lottery, to be honest. That's literally one machine. I think right now, if you take all of the network hash rate, we are talking like 2.5 million ASICs. Like if all of them are like S19s, something along those lines. And this is like one of those. And I was able to win one of the 144 blocks per day. So yeah.
That's
great.
That's insane.
That's an insane payoff.
That's but the question is, right, is what's going on behind the scenes there, right? Because I don't know how much I believe, think about it. Think about the amount of luck that would take. Yeah, because of course, statistically, eventually, every miner is gonna find that block reward, but you're spanning that out over a very, very long period of time, right? So was it, Guzman? What's your best guess here? What's going on behind the scenes of that insane block reward that one ASIC found?
It's statistics. At the end of the day, it's just that, and to avoid extremely lucky or unlucky scenarios like this one, that's why like mining pools exist. Like mining pools, we are taking on all of that risk into our balance sheet and paying miners on the expected value of their hash rate, regardless if the mining pool.
But that one person is spending a lot of money in electricity every single day, and the odds of him finding that block is absolutely minuscule.
I would not recommend doing that at all to anyone.
No, not at all.
Like, don't do it. Don't do it.
That is absolutely. What machine is that? That's just one machine, basically.
Yeah, could be like an overclock S19, or if not, it's, I would say, like a couple smaller machines. Maybe it's a miner with a couple rigs. I hope that this is like a home miner just mining out of the garage, and now they got like a 6.25 BTC on their address. That would be great to see.
That's absolutely crazy, man. That crazy. He beat the odds, and he made a nice little fortune.
Yeah.
Nice little stack because of it. But anyways, very, 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 very interesting stuff. Guzman, thank you for explaining to everybody all that awesome mining stuff. Phil, thanks for pulling up that awesome data. That's a one in a lifetime what you just saw there, ladies and gentlemen. That's absolutely crazy. But anyways, Phil, it's time for the Daily Fail.
The Daily Fail is brought to you by Amber app. Check them out. It's the easiest way to buy Bitcoin. That's right. You can stack the Schiff, which means every time Peter Schiff puts out a ridiculous tweet, you can stack that. The link is down below. All right, Yellow. I know we're stacking the Schiff. You stacking the Schiff?
Amber, the smart way to stack sats.
Okay, so Lucky Redfish tagged us in this particular tweet here. Now we're going to do some switching back and forth with the screens, but just bear with me, okay? This is a video interview that took place in August 2020 with Vinay Gupta. Okay, now many of us may not know who Vinay Gupta is. I do remember him from 2017, so we're just going to take a quick look at his bio before we explain what's in this video. Okay, so self-described here. So Vinay Gupta is a visionary serial entrepreneur and coder and well-known in the blockchain community. Gupta helped coordinate Ethereum's 2015 release, working as a project manager on strategy and communications. He worked as the strategic architect of Consensus, the leading crypto venture studio, and as the designer of Dubai's national blockchain strategy. Okay, so just giving you guys his background so that we understand, because once I show you guys the videos, you're gonna be able to connect the dots, right? Because this person has intimate knowledge of Ethereum, has intimate knowledge of Consensus. So that's what makes these interview videos that we are gonna dive into in a second very meaningful. Before we explain these videos, before we dive into these videos, just give a quick explanation, okay? So at Nerd Nation Unbox, recorded these and release them. So thank you very much, for doing that, because this is very helpful. There is going to be a link for the whole interview, the 25-minute interview in our show notes. Now, what we're going to be detailing, because we can't show you the whole 25 minutes, is a 1-minute segment from part 1 and a 1-minute segment from part 2, okay? And what he discusses in these, okay, keep in mind what his background is in Ethereum and Consensus. He discusses essentially why all these tokens, all these shitcoins have to be built on top of the grand Pumbaa shitcoin Ethereum, okay? He explains why the liquidity has to stay there, and he essentially, okay, in not so many words, explains how the VCs have figured this out and how they've gotten their hands, how they've gotten their hands into the cookie jar. Anyways, let's dive in. We're going to start with the first video, okay?
What they're doing is this. You've got $500 million worth of Ether, right? You can't sell $500 million worth of Ether without crashing the Ether price. So what you're looking for is ways of turning your Ether into money in ways which you don't crash the Ether price by selling out and turning it into dollars. This is the core goal. So what they've discovered...
Turning your investment, right, into money without crashing the Ethereum price, okay? So it's very nefarious.
There's a whole bunch of weird protocols that allow people to lend money, lend their Ether out, and then claim interest on the Ether, which is then paid in real currencies.
DeFi, that's what we've been saying, it's DeFi, and what have we been telling you? Where does the liquidity come from? Who is this liquidity? Who are these liquidity providers? It's all the new bag holders that come in. Anyways, okay, I digress, we continue.
So what we're doing is we're building a whole kind of speculative leverage market. You've got 1,000 Ether. You want to buy more Ether because you think the price is going up. So you borrow money against your 1,000 Ether into another token. Then you sell those tokens for more Ether. And so you've got all of this kind of leveraged financialization stuff going on. The critical thing is that it's all zero sum. Every penny made in these markets is being lost somewhere else in the system. And
every penny that is being made in these markets is being lost somewhere in the system. Now look, not everybody knows what a zero-sum game is, so we're going to just, provide a quick definition. A situation in which one person or group can win something only by causing another person or group to lose it. That's really just like Forex. Forex is a zero-sum game. Anyways, we will continue on, okay? Now, this is part 2. Of course, it was playing while I was talking, okay? So this is part 2 of that video, and we're just going to take this is just a snippet, okay? And it's continuing on what he was explaining about the DeFi markets, all right? Now let's dive in.
So, to all intents and purposes, what we've gotten is very, very, very aggressive, unregulated crypto speculation. And it's just draining money from people that are buying Bitcoin or weird tokens in the hope of getting rich one day.
Yeah. So are you actually writing off when you sold your Ether, or you didn't get any money out of that?
No, I mean, I sold it at 14. I probably pulled out 2 years worth of income, maybe a little more. But, I knew that if I held onto it, it was going to be worth a lot more, but what was going to come with it was a shit ton of legal risk. And so I sold it out at that point because I wanted to be out of the legal firing line. But I also had a feeling that the project had become fundamentally corrupted, kind of at a spiritual level. And I think that has been very much borne out in practice. Right? it has not developed a defensive line. There is a new project called
Okay, and right at the end, he goes to shill a brand new project. So hold on, okay. Before we move on to the next piece of this story, I just want to explain that oftentimes the person divulging the information, right, and the actual information itself, it can vary greatly in the sense that, some people are imperfect tools, right? I've heard that expression done before, is that, some people are imperfect, we'll say, vehicles for a message, right? And the reason why I'm saying this is because he's a serial shitcoiner. Okay, he's a serial shitcoiner, and I'm going to show you guys something after. Okay, because even though he just explained to you how people are being fleeced in the DeFi markets and with shitcoining, that's not stopping him from shitcoining. Okay. Anyways, and we're going to dive into that a little bit later. Okay, but first we're going to go take a look. So it's really interesting. As I was watching this video and we're diving in, this article was published just today, okay, 4 hours ago by a Mike Hobart, okay? Dark cloud cover, an ominous shadow is hanging over the crypto space. I hate that word, crypto. It's so terrible. Okay, anyways. On January 5th, 2022, video content was shared on Twitter of a Google Meets video conversation between Marcin Jagubakowski and Vinay Gupta, which looks to have taken place on August 15, 2020. In just 3 minutes and 13 seconds, Vinay appears to give details on the precisely speculative bubble within the altcoin space, and particularly the DeFi and NFT markets that the Bitcoin community has so vigorously called out. One question that's been very key to this space as it has been unfolding that I couldn't particularly parse out, why are they all built on top of ERC20 tokens? And we just explained that in the video. Simple answer, which is exactly what he explained, what Vinay explained, to capture the value of the Ethereum token. That's the signal. So they don't lose it. It simply just shifts, but it's all in the same place. Anyways, so that gains can be realized without crashing the USD price value of the paternal token. This is worse than a Ponzi scheme. I mean, this is like Ponzi cubed. Anyways, let's continue, because you see, when I started to watch this interview, it was very reminiscent. Immediately, it reminded me of the mortgage crisis. And as we dig down into the article right here,
why did it remind you of the mortgage crisis?
It reminded me of that. You'll see, because we're going to explain it a little bit later in the article. It has to do with repackaging terrible investments as something new and essentially creating liquidity for liquidity's sake. But these investments that the retailers are buying, right? In our case, right, we're talking about just random bag holders and noobs and, you know what I mean, stuff like that. These people don't know any better. They're just quote unquote investing the same way as the people that were buying these mortgage-backed securities. They thought that they were buying AAA high quality mortgages. But what the bankers ended up doing was they started swapping in these subprime mortgages into these mortgage-backed securities. So, they were essentially spreading the shit, right, all around. So it's just thin enough that you don't really notice that you're standing in crap, but it's all around you. It's just a very thin, spread out layer. Anyways, in 2017, this was all the hype. Crypto diversification. I remember this when I was in 2017. I came in and I was telling people, yeah, I'm holding Bitcoin, and people would tell me, no, you need to diversify. There's so many more currencies out there. You don't know which one's going to win. Okay? And of course, I didn't know shit. I didn't understand anything about Bitcoin. And I was like, well, that makes sense, right? We need the ones with the best technical properties. Anyways, so this little quote I thought was very interesting. Crypto diversification equals 2008 MBS diversification. MBS stands for mortgage-backed securities. Let's tie it together. The creation of MBSs, compounded by their success, opened the floodgates for financial engineering. DeFi. The redistribution of wealth rather than the creation of wealth. You now know what financialization is. The act of inventing new methods to rearrange who has money without actually creating a new product. This is exactly what the shitcoins do. This is exactly what it is. The problem is that the aforementioned process of these ERC20 tokens being utilized to capture returns without crashing the underlying value of the ETH market has now been co-opted by VC and hedge funds and legacy market participants. Think A16Z, think Poly Capital, think Pantera Capital, think Coinbase Ventures. Anyways, I sound like a robot at this point because that's what this is. This is robotic, psychotic crap. And we just keep falling into it. Anyways, we're going to tie this up right here. Do you remember what banks and Wall Street did with the mortgage-backed securities when they ran out of the high-quality product? When I was talking about before, they diversified by throwing together a significant quantity of medium to low-grade quality products until the risk exposure was deemed to be diminished by spreading out the surface area of the exposure across the varying degrees of quality. And this was my point before about spreading out the shit just thin enough that you don't notice it. Okay, and this is exactly what they did. Okay, and this is exactly what they're doing. And this is why you have to ask yourself, where does this liquidity come from? Okay, now, one last piece to this, okay? Because that guy, Vinay, gave a great speech, okay? Gave a wonderful speech. But right here is his new product, Materium. Okay? And let's just scroll right down and take a look. Buy real physical gold bullion NFTs on OpenSea. Now, you see, he understands. You'll notice in that interview, right? He said that he got out in 2014. He wants to make sure that that it's recorded that he has absolutely no Ethereum, because make no mistake, Ethereum will eventually have its day in the sun when the World Economic Forum and the other puppets that are around it that we've exposed are, when they actually decide that Ethereum is not what they need. Okay? So just to wrap this up, guys, we can see this, okay? We've got these other shit chains that are coming along. They're doing the same thing as Ethereum. All of this is meant to steal your money. All of this is a scam, okay? And, I mean, we just showed another nail in the coffin.
Man, look, it's total smoking gun. Man, it's just... the more you uncover, the more you dig, the more you realize that it's the same people that are backing the same shitcoins, and the sole purpose of these shitcoins is to enrich the developers and these VCs themselves, and they have absolutely no other use case whatsoever. And the guy, you heard it from the horse himself, right? You heard it from the horse's mouth himself, right? Like, it's all so that the Ethereum stays within the ecosystem so that the price does not drop, and it's just one giant, pump and dump after another pump and dump. We saw a little glimpse of it yesterday when we covered the BitClout guy, how he just moved on to the next one. And why wouldn't all these people move on to the next one if they made so much money on the first one? They realize they have a working formula, might as well just stick to it, do it over and over and over again, rebrand it slightly, just change the brand, change this, change the logo, change that, and then do the same scheme all over again. And that's why these VCs don't like Bitcoin, because they can't do that. In Bitcoin, everyone's equal. You have to stand in line and buy Bitcoin like everyone else. Look at Michael Saylor. Look what he had to do to stack all that corn, right? He had to do it slowly over time so he wouldn't push up the price. He was just like everybody else. These VCs want to play God. They want the astronomical gains at the expense of everybody else, and the more Phil digs deep into this, the more he uncovers the rotting pile of shit behind all of these shit coins, and this is why you should only Bitcoin. But anyway, Gooseman, do you have any thoughts on all this before we move on to the daily meme review?
Yeah, sure. I mean, this is kind of expected, and just by looking at the fundamentals of these coins. I mean, also like seeing Ethereum transition into like proof of stake or Ethereum proof of, like 2.0, right? That's literally VC is trying to get more control over Ethereum. Proof of stake is like essentially leads to centralization. All of these huge entities, funds that have billions of dollars pouring into this ecosystem by going to a proof of stake, they will only gain more and more control over Ethereum. And what happens? There's also like multiple companies that are like leading their like development direction in Ethereum. And that just cannot happen in Bitcoin. Why? Because there's proof of work, and proof of work cannot be as centralized as proof of stake can be, because it's pretty much impossible to essentially convert that all of the amount of energy required to essentially dominate the entire chain. So yeah, I mean, this is to be expected just by looking at the fundamentals of the coins. Like the way in which Bitcoin was built, in which we have that like supply cap, in which we have proof of stake as the proof of work as the consensus mechanism, is what brings the robustness to Bitcoin, and that's literally what Ethereum is lacking. So all of these like DeFi games, all of these plays that we are seeing, it just cannot be built over Bitcoin because the fundamentals don't allow it. So yeah, I mean, this is nothing new to me, to be honest. I mean, this is to be expected in something that is tending to more and more centralization, where like a few people want to control the entire ecosystem.
Absolutely, and then and just that point right there. What is that but not the same than the fiat system that we have been experiencing all our lives, where a small group of elites are essentially God, they make the rules, they call all the shots, and all the rest of us peasants, get screwed over. At least with Bitcoin, it's rules without rulers, everyone's on an equal playing foot, and that's why they hate it. That's why they hate it. That's why the World Economic Forum backs Ethereum and not Bitcoin. They want their special seat at the table. Bitcoin doesn't allow that. That's why they hate it, and that's why you should only Bitcoin. But anyways, Phil, it's time for the Daily Meme Review. The Daily Meme Review is brought to you by Citadel 21. It's the best Bitcoin cultural zine. It's stories, comics, articles by toxic, savage Bitcoiners. But be quick about it because there's only 1,000 copies made per volume. Get your print of Citadel 21 today. All right, the first meme is brought to you by a legendary meme lord, Big Sean Harris. Bitcoin is that easy. So to summarize, fair, rare internet gold, buy some, then sell all your stuff for it, and human hamster wheel goes away. Absolutely hilarious. Moving on to the next one, by Bitcoin Gandalf. Michael Saylor, 500% allocation to Bitcoin. Bill Miller, 50% allocation to Bitcoin. Ray Dalio, 2% allocation to Bitcoin. That's accurate. Anyways, moving on to Ding Dong 3001. Traders, oh my god, WTF, plebs, just an ordinary day in the life of a hodler, stacking more sats. Fucking legends. It's like an artwork. I like it. I like it. All right, moving on to Guy Swan. I love this meme by Guy Swan. Mm-hmm. This is going to be the headline tomorrow. How my friends think it's going versus how it's actually going. When Bitcoin dips, text from an old friend, how's that Bitcoin going? How they think it went. Buy, sell, how it actually went. Buy little. This is how it is. This is the DCA, the Swan, strike, fold, sold my chair, right? You know, this is literally what it's all about. This is what being a Bitcoiner is all about. Moving on to this one. What were you doing January 10, 2009, running Bitcoin? That's the legendary Hal Finney, fucking legend, the little kid. Absolutely hilarious. Moving on to the toxic Bitcoiner. The centralized autism isn't priced in. The super cycle lure. Smash buys at every price. Zero leverage. All other property is inferior. Give zero fucks about interest rates. Zero counterparty risks. Superhuman autistic abilities. All your models are destroyed. Completely devastated. Absolutely hilarious memes. And for that, I'm going to give it my little Coca-Cola airplane. It's made out of old Coca-Cola cans. It's a little airplane. What about you, Phil? What would you give those memes?
Very commendable. I've never seen a Coca-Cola airplane. Very nice. I like that. That is an awesome collectible. Okay, those are great memes. I am going with, that's right, one of my random gadgets. It is a Pi fan. Take a look, the Pi fan.
Ooh.
Yeah.
All right, Guzman, the miner. What would you give?
For the
those memes?
I have a Bitcoin Passport hardware wallet.
Oh. Foundation devices.
Foundation devices. Yeah, the one with the AA batteries. It's amazing.
Shout out Zach. Shout out Zach for making that awesome hardware wallet. But anyways, guys, we want to know, do you agree with our scores? Do you disagree? Let us know down in the comment section. And of course, join us on alternative video platforms. YouTube is going a little crazy, banning some channels. I just heard, fresh off the Telegram, Bitcoin Magazine's channel was just snipped out of existence. So make sure to subscribe to us on alternative video platforms like rumble.com and our personal favorite, bitcointv.com. They don't censor there because it's bitcointv.com. And of course, join our Telegram group. Link us some Bitcoin memes to review. Because of Bitcoin meme review, we need Bitcoin memes to review because of Bitcoin meme review. But anyways, Phil, it's time for the Daily News. The Daily News is brought to you by CryptoCloaks.com. They make the best 3D printed Bitcoin merch, like the 3D printed Bitcoin Freedom Grenade. Unscrews, put your favorite hardware wallet in there. Or the 3D printed Bitcoin Honey Badger also opens up. You can put your open dimes, your hardware wallets, really, really cool stuff. All 3D printed, and you can take advantage of the link down below for 5% off anything on the store, CryptoCloaks.com. All right, another historic moment. Bitcoiners. Bitcoin is bringing freedom to El Salvador. It's bringing hope to El Salvador. We have the CSO and a dear friend of the show, Samson Mao, in the Legislative Assembly of El Salvador. Check this out. They're about to pass a law to make the volcano bonds a reality. Let's take a look at the video.
Hey Sam, welcome to the Congress of El Salvador.
Thank you, William. It's an honor to be here where history was made last year in June, right? When the Bitcoin law was passed.
Yeah, exactly. This same spot was where everything happened. Our president, Nayib Bukele, sent the bill project to the Congress, and within 3 days, we approved it. And it became the first Bitcoin law in the whole world, making it a legal tender in El Salvador.
Yes, and this year, we're going to have some more exciting things with the law for digital financial assets, which enables the Bitcoin bonds.
We're ready for it.
Yeah, volcano bonds are coming, EBB1 is coming, and we're going to make it all happen.
And it's going to happen here in the Congress of El Salvador again.
Yes, history again will be made in El Salvador.
Congratulations.
Congratulations.
Absolutely crazy. Hopeful. You see hope there, right? Now, let's contrast that with something else. But before we get to that, before we get to the stuff that's going on in the clown world, fiat world of the legacy financial money printer worlds like the US, like the UK, before we get that, also some bullish news. Cash App. That's right. Cash App has added Lightning Network functionality. I have already tried it. It works. Absolutely bullish. Thank you, Jack, for quitting Twitter, becoming Unleashed, and just adding all your goodness to the world. So now not only do we have Strike that enables easy to use Lightning Network transactions, we also have Cash App as well. Anyways, moving on. So you compare this to El Salvador. This is hopeful. This is cheerful. You feel hope for the future. Let's take a look at what's happening in the clown world in the US, right? This is an article by Bloomberg. US inflation rate is probably going to spike again. And you know who would have told you this? The Bitcoiners, since last January. The widely followed consumer price index on Wednesday is forecasted to rise 7% for the year through December. That is even higher than last year, and climbed 0.4% from a month earlier the following day. Another Labor Department report is projected to show prices paid to producers surged nearly 10% in 2021. Absolutely crazy. You know who called this? Bitcoiners did. Let's see. Let's see how the Fed is reacting. Powell assures Americans that Fed will tackle high inflation. But how will they? because the Fed is stuck in a very tricky place. And anyways, let's see how the right now Powell's playing whack-a-mole. Okay, he's playing whack-a-mole right now. He doesn't know how to deal with this. But let's see some of his comments, and let me know if you guys are thinking the same thing we're thinking. Fed. And this is Walter Bloomberg. He covers, he's very good account. He covers all the recent news. He has a very great Twitter account. But anyways, just check it out. Fed's Powell. We haven't made any decisions regarding balance sheet reduction. Fed Powell. We will talk about it again at the January meeting. Interesting. Powell. We tend to take 2, 3, 4 meetings to make such decisions. This is real, by the way. Fed's Powell. Balance sheet is far above where it needs to be. And let's see how far above it is. This is the Fed balance sheet. Yeesh. And this is in 2008 when Satoshi invented Bitcoin, the Genesis block. Chancellor on the brink of the second bailout for banks. And this is when the QE experiment, this is how it works. The Fed puts stuff on its balance sheet, and then it prints the money. Satoshi knew that they would not stop printing, and that's exactly what they were going to do. The money printer went absolutely wild. This is the M2 money supply. This is the beginning of the pandemic. Money printing has not stopped. Here is Powell essentially saying, we're going to take 2 or 3 or 4 meetings to stop it. We're going to raise the rates in March. We're going to do that. But let me tell you why they can't do that, right? Here is an article by CNBC. Higher interest rates upset stock market as high inflation tests the Fed. U.S. stocks resumed their sell-off on Monday as government bond yields continue to trek upward, a hint that many traders are certain the Fed will soon hike rates. Traders say the pressure on U.S. stocks isn't thanks to material concerns about the economy, but portfolio repositioning for higher borrowing costs. Now you have the potential for interest rates, which appeared like they might not start going up until June. Now there's like an 80% probability that will happen in March. So what is going on here? It's very simple. It's what Mark Moss said when he came on the show. It's what we have been saying for the past year now. The Fed is stuck between a rock and a hard place. If they stop printing money, guess what happens? The stock market crashes, like that CNBC article just said. And if they continue printing money, guess what? More inflation. So what are they doing? They're absolutely scrambling. As you could see by the statements by Powell himself. He's saying, yeah, okay, we're going to raise rates, but it's going to take us not 1 meeting, 2 or 3 or 4 meetings. But at the same time, the rates are going to stay where they are. We're not going to printing money. So they don't want to crash the stock market, but at the same time, they want to stop inflation, or they want to appear to at least stop inflation, because inflation really helps the elites that have their wealth in equities and real estate. So this whole thing is a goddamn catastrophe. And if you want to save yourself from this political clusterfuck of a money, all you have to do is opt out, buy yourself some Bitcoin, and avoid all of that freaking madness. Because this, if you think this is just the beginning, this is going to get worse. They don't have more road to kick the can down. This is game over for the fiat. Anyways, Phil, what are your thoughts? And then we'll move on to Guzman.
How long until the Fed owns the entire country? Right? Like, I mean, they just keep buying assets like there's no tomorrow. I mean, how long until they just own the whole country? I was watching that, like as you're reading through this, and I'm like, you kidding me? There's almost nothing left. What are they pretending they keep buying?
$8.8 trillion on the Fed asset sheet. 8.8 trillion. Anyways, I'm sorry, Phil. Go ahead.
Oh no worries. It's brutal. But the other piece to this is
by the way, the GDP of the U.S. is 21 trillion. Oh. That means that the Fed almost owns half. So, anyways.
All right. So what? Like 5 more years till they own the whole country? at the rate they're going?
I would say quicker than that, my friend.
All right, 2 to 5, 2 to 5. We'll go 2 to 5. But no, the other point that I was going to make was this, right? When price fixing, because let's face it, let's face it, you hit the nail on the head. They can't stop printing money. They can't raise interest rates. They can't crater the stock market. I mean, yes, they can do all these things, but what are they going to do to get out of their own way? They can't do anything. So to me, the only next logical step, which again is not actually logical, it's logical for them, okay? Because what they're doing makes no sense and they're money magicians. The next logical step for them is to start price fixing. Because maybe for the next year or so, consumers aren't really people are gonna complain about the price hikes, but eventually we're gonna get to this kind of like, what's that term? Like this runaway inflation, which conveniently that term totally disappeared, right? We've gotten rid of runaway inflation. We've gotten a transitory inflation. At this point, there's no inflation anymore. Now it's just the Fed's fighting inflation. So we've gotten rid of inflation, even though it's happening all the time and it's the highest it's ever been. So it's the highest been that it's been in many years. So to me, when does that happen, right? When does the rubber hit the road and they can't stop what's coming? So those are my questions, right? When does the Fed own the whole country? When price fixing?
Guzman, you want to hit this? What are your thoughts on this, brother?
I think what happens in the next 3 to 6 months is going to show very clearly who the Fed and US government as a whole really care about. Because, you just said that inflation really hits who essentially makes the least amount of money, right? All of the lower and lower middle class in the US and all over the world, right? Because there's also a lot of goods that are priced in USD. So the US is also exporting inflation to other countries. So on one side, they have, should I defend the interests of the people who make the least amount of money, or should I continue to pump the assets of the wealthy, right? So whatever they decide to do over the next 3 to 6 months is going to clearly show who they are actually looking out for. And then going back to Bitcoin fixes this. This is exactly why we are in Bitcoin, because there's nobody that can choose between one of the two. Everyone is in an equal standing, regardless if you own, $3 worth of Sats equivalent or 120K coins like Sailor does. Doesn't really matter. Everyone pays the same transaction fee. Everyone has the same priority over the network. Everyone can do the same shit. So that's something I'm really keen to see what happens with US economic policy over the next 3 to 6 months. Super anxious to see what happens here and see who they end up choosing, because it's literally one or the other. There's no real way the system to just essentially take care of everyone, because it's kind of flawed in how it's designed. So let's see how it happens. And I really hope they don't go into fixing prices, because that's a very South American thing to do. I'm from Uruguay. I've seen that happen in multiple countries. Sooner or later that explodes and then prices go to the moon, even faster than Bitcoin will eventually do. So I really hope they don't do that. And something that is kind of crazy to me. So all of my life, all of my savings were in US dollars. Why? Because my local currency, which is the Uruguayan peso, inflation used to be much higher than the US fiat, right? And now it's the opposite. So it's kind of crazy to me that I say, I'm saving Bitcoin, right? But to people that are not, they should now start saving in Uruguayan pesos, because there's less inflation than in the American dollar. Right now, Uruguayan inflation is just under 7%. So it's mind blowing. I went for 4 or 5 years to university, and it was the US dollar is kind of what every other currency is backed on, and you should save in that. And every single asset is denominated in dollars and whatnot. And now it's fuck that. It's turning around in literally since COVID 24 months ago, that literally turned around. So it's kind of crazy, mind blowing to see, not for me, but for also older generations, right? I'm fully into the Bitcoin ecosystem, and a lot of my life savings are in Bitcoin. But for people that are not, like start like telling my parents, hey, you should be now like saving in Uruguayan pesos. They are like mind blown right now. So yeah, I'm really keen to see what happens over the next few months with the U.S. economic policy.
I completely agree, man. It's gonna be freaking crazy. But if you own Bitcoin, you're gonna be watching safely from the sidelines, eating some popcorn. But anyways, to wrap up the news segment, we brought on Guzman today, and Guzman is an expert in mining. Check this out. Canadian Bitcoin miner Bitfarms buys 1,000 Bitcoin for $43 million. So that's absolutely crazy. And also, I've heard from inside sources that miners are not selling the Bitcoin that they are mining. They are keeping it to themselves. But Bitfarms did something even more. They went out of their way. They're mining Bitcoin, but they went out of their way to buy more Bitcoin. So, Guzman, why are miners, and I'm not talking about little tiny miners like myself, okay, that has, a couple hundred ASIC machines. No. Why are these giant industrial miners buying Bitcoin? And more importantly, why are they not selling the Bitcoin that they're mining? And this is completely different, I might add, from the last cycles where miners would sell some of their Bitcoin at cost. Why is it different, Guzman? What's going on behind the scenes? What could you tell everybody? What do you know that we don't know?
I think there's kind of like different reasons why. The first one is because I think all of these companies are like Bitcoin native, that they do see Bitcoin as kind of like that superior asset and the only asset to like store worth. So that's kind of like, I would say, like number one reason. And then the second reason is that these companies are looking to continue buy more ASICs, right? To continue adding to their portfolio. And ASIC prices are extremely correlated to Bitcoin price, right? So if you're planning to deploy capital into this space over the next, 3, 6, 1 year timeline, and if you don't want to lose or gain purchase power of the number of units or ASIC machines that you want to deploy, it's better if you keep Bitcoin into your balance sheet, because if Bitcoin goes down, the price of these ASICs goes down. If Bitcoin goes up, the price of these ASICs also goes up. So on Bitcoin terms, you're always maintaining your purchase power. So if Bitfarms over the next 3 to 6 months wants to go to Bitmain and put like another huge order like Marathon did to buy the latest and greatest S19 XPs, it's way more intelligent if they're holding Bitcoin into the balance sheet rather than if they are holding fiat. Because Bitcoin might go to 100K in the next few months, or or 20. Nobody knows. But if that happens, and if they're holding fiat, they could buy half the number of rigs or twice as much. And if you're trying to do like any planning and forecasting, you don't want to be exposed to that volatility in the ASICs markets. So that's also like another reason for a lot of the mining companies to be holding Bitcoin.
What are you not telling us, bro?
I think that's it. Luxor is also holding Bitcoin. We're also buying a few rigs, mining pool, holding Bitcoin.
So let me in all seriousness, I'm trying to get as much out of you. No, but why
names?
Why is it that in the previous cycles, Bitcoin mining companies were dumping a lot more Bitcoin compared to this cycle? Why is it that this cycle it's different? Bitcoin, I know you know what I'm talking about. Why are Bitcoin mining companies and pools not dumping Bitcoin compared to the previous cycles that they were dumping a lot more Bitcoin to fund operations?
Well, I'm sure if that's too true, I would say. Yes, there are very few mining companies that are like just following that like cash flow like business model. There are a couple like publicly traded mining companies that are just mining Bitcoin to get the cash flow and pay dividends to investors. There are a few, but most of these companies are trying to get leverage because in the public markets, they also get like a 10x multiple on their hash rate. So right now, if you go and see all of these publicly traded miners, you see like, for example, Marathon. Marathon has like just over 3 exahashes worth of hash rate, right? And they have a 3 billion, give or take, like market cap valuation, company valuation, right? So that essentially gives Marathon 100K per valuation per petahash. 100K per terahash, right? So you can literally go and buy a terahash for $100, plug it in, and get like a 10x multiple on the ASICs that you just buy. So that's also like another way to get like a public market multiple, just like buying Bitcoin and then procuring and just buying more machines. I mean, we don't really know if Marathon is able to plug in all of these machines, or if they are like even going to be able to fulfill or like meet all of their hash rate expectations that they've been promising. But they're kind of incentivized to continue and buying more and more machines because the public markets then go and reward them, right? They're just boosting their stock by 10x. So it's another way to get leverage. And if I'm CEO and I'm boosting my stock 10x every time I invest 100 and I get 1,000 worth in valuation, I mean, this is kind of like a non-stop wheel that I would tend to follow. And this happens in every single public traded company that is out there. And this is not a Marathon. This is Bitfarms, this is Argo, this is like every single mining company out there.
Absolutely. And hopefully Luxor is heading in that direction soon one day. Phil,
We'll see.
I know you had some questions.
Yeah, no, you know what? I had a comment before a question, but it kind of had to do with the VCs. If we've learned anything from the VCs, it's that you can just keep getting money perpetually without actually providing anything, without actually providing the end product, right? Always being able to kind of kick the can down the road. I'm not suggesting that Marathon is doing that necessarily, but I think you raised some very good points, right? Like, how much would it cost to plug in 78,000 miners, right? Like, what facility would they have to build and stuff like that? So I think that's definitely a good point. Okay. My question though, because as you were explaining this, I was thinking this, right? Is it at all possible that the reason why the miners, I know I'm just totally blanket statement, the miners, but whatever group of miners it is that is not selling, is it at all possible that they're not selling because they're secretly filled with hopium that we're going to get to 100K sooner than later? I had to throw it out there, because miners not selling to keep the lights on?
I mean, maybe miners are no different than like any other holder. They have no special powers in here. So yeah, I mean, maybe they are. I mean, I'm also holding, and even if we go to 100K, I'm not going to be dumping my packs. So
right?
I don't think miners will either, to be honest.
So, man, I'm sorry. I did have one other ridiculous notion, which is this: the price is up to between 40 and 50K. Miners just don't have to sell as much Bitcoin to provide the exact same services. So maybe that's all we're experiencing. Maybe it's just natural market dynamics. We just don't have to spend as much, so we get to hodl more.
Absolutely crazy. Guzman, thank you so much for giving us a little bit of inside baseball into how all that stuff works. I'm sure a lot of people found it valuable. We don't have a lot of people that work in your position on the show often, so we really appreciate it. But anyways, Phil, there was an open source software release today. Why don't you tell everybody about it?
Software releases. The software releases are brought to you by CipherSafe. Check them out, cyphersafe.io. They've got the Cypher Wheel, and just recently, I received the Cypher Grid. This is definitely the safest place that you can store your Bitcoin seed. The link is down below in the show notes. Interestingly enough, had nothing to do with the meme score from our wonderful guest, but Foundation Passport version 1.0.8 was released, and that's down below in the show notes. Now, guys, as you know, rain or shine, we post Monday through Saturday, and we have our audio-only episodes, which you can check out. We release them at the exact same time as the videos. You can check them out on Apple Podcasts, you can check us out on Spotify, and you can check us out on Anchor.
Awesome. Thank you, Phil. All right, guys, that was our show. Before we go, I want to give a very, very special shout out to Guzman Pintos. You can go give him a follow at Guzman Pintos. He is the CPO at Luxor Tech Team. Awesome pool, by the way. Highly recommend it. Luxor Mining Pool. And definitely go check out It's like the Clark Moody dashboard, but on steroids. It's called Hash Rate Index. Anyways, guys, that was our show. If you enjoyed the show, you know what to do. Smash that like button. And of course, if you want to continue hearing the catastrophic fails from the shitcoiners, Phil just keeps revealing it. It just doesn't stop. And the Bitcoin news from the pleb perspective, definitely consider subscribing. And we'll see you tomorrow, guys, for a brand new episode of Simply Bitcoin.
Runaway inflation, transitory inflation, never-ending Fed meetings with no solutions. Opt out. It's time for Bitcoin. Booyakasha!